Time for the market report. This month's WASDE came out just a few days ago.
That's right, Mike, and we'll get into that and more. But first, the numbers. What were last week's biggest gains and losses? And then, this month's WASDE report. What does it have to tell us? And finally, our row report, the WASDE's impact on crop prices and what we can expect to come. So, markets split at closing last Friday. Row crops mostly down while livestock a mixed bag. Let's take a look. Last week's biggest gain, cotton again, up a little over 5 cents, a near 6% rise from the previous week. Last week's biggest loss, lean hogs, down a bit over 2.5 cents and over 3% change from the previous week. So, this month's WASDE report dropped not long ago, a monthly update on ag commodity supplies, usage, and other factors, both domestically and globally. Here's what it said this month.
U.S. wheat food use down due to reduced flour grind. Exports unchanged and ending stocks raised. Season average farm price $7.20 per bushel. Global wheat supplies up mostly due to higher production in Iraq and Argentina. Consumption also up due to food, seed, and industrial use in India. Trade up while ending stocks lowered. U.S. corn use for glucose and dextrose down, ending stocks up. Season average farm price $4.80 per bushel. Global corn production down due to reductions from Brazil, Mexico, and Serbia. Exports from Ukraine and Pakistan up while Brazil, India, and Serbia down. Imports raised while ending stocks down. U.S. rice supplies increased due to higher imports, ending stocks down but 40% higher than last year. Season average farm price $18.40 per hundredweight. Global rice supplies up on higher stocks in Indonesia, Vietnam, and higher production in Sri Lanka. Consumption at a record level. Trade raised and ending stocks down slightly. U.S. soybean exports down due to slow shipping and competition from Brazil. Crush unchanged and ending stocks up. Season average farm price $12.65 per bushel. Global soybean beginning stocks up due to higher 22-23 crop in Brazil. Brazil's 23-24 crop reduced due to lower yields. Exports down due to less shipments from the U.S. Ending stocks up. U.S. beef production raised, but slaughter reduced. Pork production lower due to less slaughter as well. Broiler production up while turkey production down, and so are eggs, slightly. U.S. milk production down due to less milk per cow, slightly offset by increasing herds. Butter and cheese exports expected to increase. Cheese, butter, non-fat, dry milk, and whey prices raised. All milk price forecast $20.95 per hundredweight. U.S. cotton ending stocks lower compared to last month, higher exports and mill use, and production unchanged. Upland cotton marketing year price projected 77 cents per pound. Global cotton consumption mostly unchanged, beginning stocks down. Trade also down, exports higher for the U.S., Burkina Faso, and Turkey, while lowered for Brazil, Argentina, and Australia.
So, in row crops, what's moving the markets right now? The WASDE? Not too much, really. It's more to do with global stocks. Analyst Ted Seifried spells it out.
Wheat is very sensitive to the U.S. dollar, so there's that. But, I mean, if you look at how wheat has traded since the end of December, it's been absolutely sideways. At times, the range has been fairly wide, but we really keep gravitating back to the $6 level, and I'm talking, March Chicago wheat. But we've got our major moving averages, all the way from the 10, 20, 50, 100-day moving averages, all within about 10 cents of each other, just below 5 or just below 6. And the average price since the end of December has been about $6.0125, and I feel like we trade that price a few times per week. I think there's a lot of justification for corn exports to move a little bit higher. I would have liked to see the USDA bump it up 25 million bushels on exports just to say, hey, we're paying attention. We've got some good numbers. They didn't do that. They lowered FSI, feed, seed, industrial, by 10 million bushel. And it didn't come from ethanol, so I'm not exactly sure what that was all about. But it added 10 million bushels to a carryover that we were thinking, or the average trade guess was for a little bit of a smaller carryover, ended up being a little bit bigger. And I think the biggest takeaway for corn is that instead of trending towards a 2 billion or below carryover, we're trending closer and closer to 2.2 billion. I think what's going on with the USDA is they're looking at their 163, which was their original projection for Brazil, and saying that might have been about 4% too small. So if we add 4% to that, that brings us to a 169.5. So to go from 169.5 down to a 156, that's a 13.5 million metric ton reduction. That's 8% of their overall crop. That makes sense. So what I feel like is happening is the USDA getting ahead of not wanting to have to revise this crop higher, and therefore it's allowing them or justifying them for not lowering it as much as how everybody really feels like it should be.
In the livestock markets, cattle prices still rising while hog prices sinking. And a recent report by Fox News reflected a fact we've covered before. Higher cattle prices means higher beef prices, and that will be reflected at the grocery store. As we reported last week, the latest USDA cattle report stated that herds were down 2% from last year, totaling about 87 million head. What Fox pointed out is that this inventory is the lowest since 1951, and furthermore, according to the Bureau of Labor Statistics, prices are expected to climb in the coming years as the herd rebuilds. Which means at the end of the day, you'll likely be seeing beef prices rise at the grocery store. On the analyst side, Ted Seifried says feeder cattle scarce right now and markets catching up to the realities in the field.
And I mean, everybody I talk to is just saying the animals aren't out there. You know, feeder cattle are just so hard to find. So this makes more sense. You know, basically what's happened since the middle of December to now makes a lot more sense. Now the question is, since we've had a very significant bounce, really we're talking about a 66% retracement in Fibonacci off the lows, where do we go from here? And the volatility that we've seen in the last couple of days, the fact that we weren't able to hold on to strength on Friday, I'm a little worried that we get a bit of a correction, but longer term, I'm still really rather friendly on the cattle complex as a whole, as long as our domestic economy stays strong. Contract lows and contract lows on corn, you know, day after day with improving pasture conditions. These are all really good things, right? And that is a friendly thing for feeder cattle. Look, the feeder cattle market is trying to serve a purpose, and it wants more animals, right? And it's gonna, I think it really will continue to have more upside potential until it gets what it wants. And you've got cheaper feedstocks, you've got other options as well. So I think that happens over time, but we're not there yet.
And that's it for a deeper look into the markets. Row crop stocks the thing to watch in coming weeks and the compelling story of low cattle herds.